Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on MRIN. We're big fans of reverse psychology and think we understand the plan of dissolution very well.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everybody, welcome to the Laughing Stock. Dane, how are you today?
Good. How's it going, Jay?
Yeah, what a week, right?
This has been a wild one. They've all been wild, really.
Really wild, and we're gonna go through it a bit more. But you know, we have been talking here that we are in a rough period now. But this this week was like the most hectic so far, I think. With all the tweets or whatever it was, he posted on what is it? His platform, Social Truth or whatever.
Yeah, I don't know. I don't use it. But
yeah. So there was a buy recommendation almost from the president.
Yeah, I'm questioning if that's allowed, but
yeah.
I mean, whatever. I guess you can say to just, you know, I guess that's not like. I guess everyone should say you should be invested in the markets.
Yeah.
But it's hard to follow because it's all over the place.
Yeah, really. And I wrote in the description that the market is almost trading like MULN that we have been frustrated about here. Like the volatility has been pretty crazy.
Yeah. So I haven't really been doing anything in terms of swing trading. I did make one trade this week. Just on I think was it Monday everything had bounced back so much?
Yeah.
Yeah, so Monday everything bounced back hard, and there was one I took. Honestly, I can't remember what it was, but I just held it for the day because I had historically said, you know, number one, in this market with everything moving around, I didn't want to do anything crazy, and it worked. It was small, and the game was only like, I don't know, it wasn't even like 0.5% necessarily, but I'm up for the week, whatever that means. So it wasn't like it didn't work, but it, like I said, statistically not probably the smartest thing to do. But I didn't take any other trades or anything, and I just been trying to focus on some of the stuff that's been, you know, selling off.
Yeah.
More so.
I'm in the same boat. I took one trade also, but I got stopped out, and it was a bit messy. Actually, it worked out well in the end, but I was not participating because I got stopped at it triggered above my actual stop price, which happens. We can go through it later. but it's just like, it's still tough to do the swing trading. So we were talking before what kind of stream we're gonna do today, and maybe just go through the watch list and then see what we do from there. Focus on some insider buying, and we have already looked at a few of the oil company, energy companies, so maybe we can look through that. But one thing that I notice, of course, Dane, is that there's a lot of companies now with a tiny market cap in my daily mover sheet and my tracker sheet. And, you know, in the intro, we had the MRIN, who seems to be going out of business now. So there's a lot of people who struggle, you know, in these tough periods. I think my daily mover sheet last week was 2,500 something tickers, and this week it was a lot still, but it went down to 1,400 something, so it was still a lot fewer than the previous week. But still, we don't see that often more than 1,000 tickers in the weekly movers, I think.
No, yeah, that's, I mean, kind of unprecedented usually. Like, there's got to be something going on in the larger side of the market here. The thing I'll just say, just from looking at my market strength thing, because that's just one thing I've been kind of watching now, and you know, slowly I'm seeing patterns develop, because I think this is week 3 I've been doing it. It looks like on the front side of things are just starting to kind of turn a little bit, and then on the long term, all my long term ones, we're actually at all-time like lows. So, I mean, I know with the tariffs and with the you know, the future outlook right now kind of being just vague and you know, essentially, it doesn't really mean much. And I feel like you have to have context when looking at these numbers. You can't just look at it and be like, oh, these numbers are starting to turn colors, so like that should be a good thing. But it at least makes me want, like, it'll be nice to be able to watch something like this develop and then see as things turn, and then that way for future, you know, events or anything that can happen like this, I'll know when things start to turn and when I should start to ramp up back into swing trading.
Yeah.
But as of now, there's like just like some names and stuff that I'm trying to find. To be honest, a little bit of the deep value that I'm looking at right now is it's stuff that's a little stronger than I probably would have historically looked at. Because I think if you were going to do deep value at this time period, like, yeah, you could go into like really like risky things that are bankrupt looking and, you know, do really small positions and hundreds of them. But I don't have like the time to do that.
Yeah.
So I'm more focused on more of like a traditional value approach, even though some of these are deep value in terms of small companies that most people aren't looking at, but not in the sense that like it's deep value, like this thing looks like it's dead and there's like a hint of your chance of a turnaround, and I'm going to take the risk on, you know, by doing that.
Yeah. And in some of the tickers that I have seen for with a deep value lens now, especially the ones in my tracker sheet from before, I kind of would hope to see more insider purchases than what I have seen. So I'm not sure how to interpret that in terms of there. Don't get me wrong, there are insider purchases and a lot of them in general, but in terms of what I have already in the tracker sheet, which, you know, they have passed initial filter, I just expected a little bit more. I have to say that, but maybe people are just still very, very, very careful and expect maybe things to drop even more.
Yeah, I wouldn't think we've reached even like necessarily a base yet. I mean,
No.
we've talked about how things can bounce around and everything like that, but I mean, I haven't really seen any kind of semblance of something that seems predictable yet.
Yeah, I just checked on my chart. I can jump into the chart. Hold on. Here on the SPX, the S&P index, from the top now down to the bottom here that we had, it's like a 21% drop. But if you adjust it to where we are now, it's like, you know, 12.5, which the unique thing here is all the bouncing around, right? But 12.5% downfall, it's not it's not insane, you know.
No, and I mean, I'm just looking at just the total year return right now. It's like 8.5%. So
Yeah.
it's not. I mean, it's better than it was. I think it was down to like another 10% at one point when I looked.
Yeah.
But you know, like I said, it depends. There's a lot going forward here to try and figure out, you know, Trump's game plan here, because I think that's something that like you should try and understand at least how this administration is going to carry it. Is I think they put a blanket thing on there, saw how everyone's responding to it. Kind of sees. I almost feel like what they're doing is seeing what they can get away with. How far can they push it? Because the fact that he just keeps kind of backing off, like for instance, like you know, when I think you put like 130% tariff on the tariff altogether from China. You know, if you're going to continue to produce iPhones there, like the Apple's going to really suffer, because that's going to add, you know, it could potentially almost double the price of an iPhone.
Yeah, but didn't he reverse that already? Like
right, that's what I'm saying.
Yeah.
So you know, where I'm sure certain companies come to him, and I think that's part of his goal is to put these things in place. And they've already said that they'd be willing to work with specific companies to adjust these tariffs on even a company level in case some countries don't want to play ball with them.
Yeah.
So I feel like it could get really kind of complicated. Now, I'm not necessarily agreeing that the approach should be you attack everything and then let the information come back to you. But if you look at like Doge, for instance, they've kind of done the same thing. Like Doge went in, they kind of like overgut, and then as like people freak out and come back and say like, hey, like we needed this money, then they start to like assess whether that was a good thing to cut or not. And once again, I'm not saying that's the right way to go about it, but that's the way it seems like they're doing it. So the one thing that makes me possibly optimistic here is, did they throw out really extreme tariffs first here, which give you an idea of what the market's going to handle or how much it's going to bring it down? And then from there, they're going to slowly roll things back to see what sticks and what doesn't. I don't know. I'm not saying that, you know, that anyone knows. And I'm not even sure some people in this administration know exactly what they're going to end up doing, which is, I'm not saying that in like the negative connotation that everyone else probably thinks that, like, as in like, they're just complete morons and they're just, you know, guessing at all this. But, does anyone have like a clear insight on how this is going to play out? I don't think anyone really does. I don't know how you would. So with that being said, I think that like how you just had on the chart here, this, you know, from kind of where it's bounced back up to the very bottom here, I honestly think that's kind of going to be the range for a little bit. And unless there's some really positive news, it's going to take a while before any of this recovers.
Yeah. Yeah, and I'm getting a bit tired to say this on the stream, but we just have to wait and see, right? I told you in our when I texted you, like, everything else will be noise now. You see so many opinions and experts coming out saying this and that, and maybe some of them are 100% right, but don't, like, you need to work with what you have in front of you, right? And right now, swing trading, at least for us, the way we do it, it's not working well. But that, I know you said it earlier that you have started to improve your strategy and your methodology, you know, with building a new sheet to alert you a bit for market movements and stuff like that. So it's just, I think for me personally, I'm trying to learn a lot, and I hope I will look back in this period and be a bit thankful that it came so early, like in the career, because, you know, this, I don't know, I don't think this has happened like this a lot of times, at least in the market before. So it's pretty unique what's going on right now.
Yeah, I think it's rare for an administration to be able to have this kind of effect on things. Usually it's some kind of event like COVID or you know, GFC or whatever it may be. So I think like I said, I think the most important thing is just to kind of keep tabs on things. Don't go too crazy with anything just yet. As always, I remain, I would say, optimistic. I really like. I get it. Things can seem bleak at times here, but I don't know. Everyone benefits from not seeing all of this fail. So you honestly think we're going to get to the point where everyone's going to just push for it to fail? I highly doubt that.
Yeah.
Like it will work its way out. However, it ends up doing it. It's like you said, it's going to take time. So it's like, it's just a waiting game. So, I'm not going to worry about that. I'm just going to kind of keep watching things,
Yeah, and I think from reading all the books that I've done now with swing trading and Minervini and all those guys, it's like, I think it's very important what they say in terms of this strategy, that you need the market to show you what it offers.
Right.
Don't go and look for a lot of things. I know Minervini does do a lot of work, and that he pays a lot of attention now to try to find the next big movers for a longer term, and that you can do a lot of research even if you don't take a lot of trades right now. But I mean, if you were shorting things, you are probably highly successful in this period as well. But I think that's an important point. Like, okay, now it's messy, but just focus on what comes through your screens and all that stuff. And like you and I, we both took one name this week, and if that's it, then that's it.
Yeah, and like I said, it's just rare I see a day where the entire market's up like 10% or whatever the heck.
Yeah.
It got over 10% at one point.
Yeah.
So that, to me, it was just like, it's one of those things where it's like, okay, like, obviously things can over sell off, and it always will be more extreme. But it's hard to say.
Yeah. Did you see anything though this week in terms of breakout patterns and stuff like that?
Yeah, I did see successes. NutX was one of them.
Yeah.
On Friday, I saw YALA, Groupon, EMX Royalty, and Sandstorm. All looked good to me.
Yeah.
So it's not like things aren't breaking out when you look at some of these names. I mean,
No.
they're
It's just tough to pick the right one.
And I will say, at the end of like the last week in general, there was literally zero breakouts. I didn't see a single breakout basically. And then this week I have seen some. So I would say it's not like it's great. I'm talking less than, I have 4 breakouts, 2 breakouts, 3 breakouts, 4 breakouts for the last 4 days. So nothing crazy, but my point being is it's just trying to see how these things turn. And it's tough because, like I like to say, I like the 52-week breakouts. I like something that's breaking out to more of a real all-time high or new high. Just breaking out of a consolidation range. Sometimes it's early, and statistically, I've done a lot of research into that. And if you're looking at the ones that aren't towards the 52-week highs, those ones just statistically break down more than the other ones do.
Yeah.
So I think it's like, I think I was listening to Minervini talk about it one time. And I think he said 70% of the breakouts are around 52-week highs. Yeah. So, that means you're basically 3 out of 4 if you're looking at those ones. Where if you're not and you're just looking at bases and breaking out from the bases, the number is way lower. It's like 40% or something. So you have to take that into consideration. That just I'm trying to statistically make this as easy as possible.
Yeah.
And have assured wins. So,
and if you then add that with the strategy that if you are not up on a trade at the end of the day, you sell it because it goes a little bit. We have said this before. It goes a little bit against the momentum philosophy, right? Maybe then you can also limit your losses, even though you're going to miss out on a few with that method. Like if you combine a few of these things, I think you maybe can get your success rate a bit up through time.
Yeah, for sure. And I don't know. The other big thing too is just looking at like how markets swing in one direction. I also think too, you kind of have to watch where if you look at it from the opposite perspective, like right now, it would have been good the past probably, 2, 3 weeks to be thinking about shorting things. So if you're looking at from the shorting perspective, where does it get to the point if you're looking at it from the bears side that all of a sudden you wouldn't want to continue to short things because it looks like it could start to turn even or even start to go positive and become a bull market? So I haven't really delved into it yet, but I do want to start focusing on um, looking at stuff that is breaking down from highs and or breaking to new lows even. So like kind of do almost the exact opposite. And look at 52-week lows and stuff that just keeps pushing down and down and down. Because it's kind of ironic, I used to I used to like to look at charts at the 52-week lows and be like, oh, these are good value plays. And the thing is most of those ones suck and most of them will continue to go down. And they might have spikes, but like, that's the whole point of having a stop loss on some of these things. So if you're going to do shorting on the other side, I'm not saying right now I would short, just because I don't think I have the cash or the experience to play around with shorting. Really, it also really tough. Maybe I have the experience, but as those start to disappear, obviously we're flipping the other way. So it's kind of like that dichotomy of looking at both sides of it and then being able to use the opposite of what I would normally want to do to help me start predicting where it's getting to the point where it's going to be a positive market where swing trades are going to start to benefit again.
Yeah. Yeah, and I was going to ask you earlier when you mentioned the 52-week high breakouts and how successful they are. Has that been because, like you just pointed out, in the past with the deep value style, we never bought at the 52-week highs. Has that transition been a bit tough for you to get used to the idea of buying at the highs?
It's funny because now that I think back, it wasn't actually. I think the problem was if I'm looking at it just from the vein of value, yes, I wouldn't even have looked at most stuff at 52-week highs just because from the value perspective, it's like it can't. How is this likely a value at that high? But with swing trading, as soon as I understood the supply demand aspect of it, and that's what the focus was really going to be on in terms of where breakouts occur. Knowing that it quickly switched to it's an exciting thing for me if it's reaching 52-week highs. So even though historically my mentality was to kind of avoid those, with swing trading, it didn't scare me. I think as long as you understand, you shouldn't even be buying or investing or taking a strategy on if you don't truly understand it at its fundamentals. So, in terms of buying at a 52-week high, I understood that was a good sign. It was a good signal. Like you're looking for strong stocks that have momentum, that are breaking out, that, usually probably on some kind of narrative or earnings or something like that. So with that in mind, it didn't bother me, to be honest. I wasn't like, oh my God, I can't believe I'm buying at tops. It's like, it was almost the exact opposite. It's like, I see a top and I'm like, all right, that one's a buy. That's the next, confirmation that I wanted to get on that one.
Yeah. Yeah, I and what you said with the deep value style, that's why we looked for at the 52-week lows, that's why we looked for the double bottoms and why we also started to do the 10% stop, because a lot of them are shit. It's like they are trading there for some reason, but then what you look for is a clear catalyst that things are about to change, and then you want to be in as close to the bottom as you can. That's always the goal, right? But that's like it's just interesting to with what kind of focus you have on these things and how everything can be successful again.
Yeah. Interestingly enough, I'm starting to look at the charts and just look at it as if I was doing the exact opposite of what I would normally do and look for breakdowns. It's a little tough to do because usually on the breakdown days they some of them can really sell off. So
yeah.
But now I'm almost thinking too, so should I make the exact same, how I have my market strength? Should I make the exact same thing, but do the exact opposite where it's everything that's down?
Yeah.
And then that way it would be kind of the mirror image, but from the other perspective. And that way I can kind of watch the two as they shift from one to the other. And it also will get me really focusing on shorting, in the vein that, like, at some point, if I do start doing that and look for breakdowns during that time period, it would all, it's kind of crazy to think that, even in a sideways market, I think I would stick to break ups, because even in a sideways market, it should probably, the stock market usually will tend to go up after a sideways move. Just historically, if you look, there's only been so many downturns. It's usually upturns. So I'd probably focus more on break outs in a sideways market, but then in true bear markets, focus on shorting and catching the downside. Because, like you said, you said there was a trader that you had seen who was up like 60% for the year, and it was because he was shorting the whole time, doing the same thing, the opposite.
Yeah.
So I think that's legitimate, and it's probably something you should seriously consider.
Yeah. I mean,
you could have made a ton of money in this past, few weeks shorting.
Yeah, that, like, we are waiting for a period like this on the bullish side, right?
Yeah.
So it would be a dream scenario now for maybe not a dream because it has bounced so much, but up until maybe 2-3 weeks ago, it was pretty steadily going downwards, right? So that's kind of what you are waiting for then, and I need to experience the bull market first and see how I perform then, and get some part of this locked in before I start to learn about other things. But of course, I'm in the meantime, now that not so many things are moving, I'm looking to improve on things like this,
Yeah.
and I'm also building my sheet to it's very different from yours, but it kind of tracks the market as well. So it's just going to be interesting to see how that can help, and I can already see that it points out a few things for me now in a bearish market. So I'm happy with that, and yeah, I think this week, this is the one I took the in thread up, and I think it looked good on the chart. I took it. I got stopped out at 314. I had put my stop on 310, but I even got stopped out. So I missed this move up. I think I would have sold on Friday. It's a small gain, but at least I managed to pick a stock that went up. That's even if I got stopped. I tried to take the positive away from that. Other than that, I didn't see much interesting, I have to say. I watch Groupon now. Groupon looks maybe interesting here right now. What do you say?
Yeah, no, that was one of the ones I listed. I'm actually just pulling the few names that I had mentioned into my fundamental sheet just so I have them. But
Yeah.
because the other thing too is, like, I feel like if you are going to look at breakouts, no, I mean, sand is gold mining, so that one makes sense. EMX is also general mining, and the other two are tech. So I like to look at some of the numbers too, just to make sure that things look like they're at least functioning well. Like, if they're going to do well in this cycle, they better be strong businesses as well.
Yeah.
If I'm going to take the risk on of actually investing in these things.
I have Groupon in my tracker sheet, and I've been following the story there for a bit, and I see the earnings they missed a little bit and stuff like that. But they got a lot of criticism on their business model being too old-fashioned, and the products also, like, losing their edge a bit because of all the competition. But there's an article on Seeking Alpha that explains, like, the hope is to renew the platform to more online stuff and implement a lot of editing stuff in their own platforms and stuff like that. So I saw it's up 100% from the bottom here. So something is going on in Groupon right now, and also on the chart it looks it looks a bit tempting for this coming week, you know.
Yeah. I'm just looking at YALA right now, and they have been diluting shareholders, but they do have a ton of excess cash. It's a holding company specifically, so
Which ticker then? I will pull them up here.
YALA.
Hold on. Y
ALA.
YLA. One more time.
It's ALA.
LA. I doing something wrong.
Take the L out.
Y like this.
A.
Here we go.
There.
Oh my god. Yeah, it takes a while for it to load, but just continue then.
Yeah, so I'm just saying, you know, like this is one of the ones I looked at. Like, you know, I get book value at 434, so it's trading at 587, but it's also breaking towards, you know, highs. So the thing is that it's not that old. It's a holding company. They have a shitload of cash just on hand. They have no debt. So like, you know, you have to start to kind of appreciate this more from the growth perspective. But knowing that, it makes me think that, you know, if the chart looks good, this could bounce up. And it's traded as low as, you know, 380 in March. It dropped all the way down, and now it's back up to 587. So, and there's a lot of buying pressure, there's a lot of volume. And it's traded as high as back in 2024, it traded up to almost 650.
Yeah. That was in at the end of the year.
Yeah. So, you know, I'm not saying that this is going to be a huge winner, but just the way it showed strength, and the way it's pushing high again, this could keep going.
What is the move up here? It's moving almost 30% since beginning of April. So nice bounce back there.
They had their earnings call last month, so I'm more just wondering what.
Seeing Y-Sheets is extra slow today.
But I mean, this is also one of the things, and it's kind of something like a point that RK touched on is, you know, you can kind of look at the charts of some of these things, and yes, it doesn't necessarily correlate completely with where these things are, but you know, the market's relatively good at guessing some of these things, and you know, that's the kind of the beauty of breakouts is it can kind of focus your attention on some of these things that might be mispriced, because if they're pushing higher, or if you know, anything goes right, then you know, it's going to continue to break out, and it's going to be one that, you know, I might not have noticed if I was just trying to flip stones and go through it the old way I did. This kind of is a good way of screening for these things.
Yeah.
So. I'll pull up Groupon next here.
What do you think, like in terms of, you know, when we did the value style and stuff like that, we always talked about foreign risk and stuff. What are your thoughts on that in pure swing trading? You don't care about it, or is it still something you factor in?
No, everything has to weigh in.
Yeah.
I would never say I don't care about something, even if it doesn't seem like it could be an issue. You never know.
Yeah. Or maybe
like,
not as much.
Yeah. Well, yeah. It's everything in context. You know. Like I said, it's not like I'm going to start taking, you know, swing trades heavily right now or anything like that. But, you know, if I can look at something like this and, you know, let's say Monday I pull this up and it's up another 5%, and I you know, I'm like, you know, and I'll take a chance on this one. it better have most of it going for it. You know what I mean? Yeah, sure. There's foreign risk involved, but it's traded higher than this in the past. I don't know. It has insiders. You know what I mean? Like that's the other thing too, is like you can correlate these things. So you can try and, just try and find some, as long as management and stuff seems to have some skin in the game. I mean, that's one of the things that, Buffett and Munger used to always say is that like, that's why you put so much emphasis on insiders and institutional buying, because if they have their money in there, it goes to show you that, someone wants this to go up just like you do.
Yeah. I think also for my sheets and the way I pull in data and stuff, like the foreign risk for me also, usually they messed up my numbers. So that was a big, I think you, in your sheet, you still got the pretty accurate numbers when there was a company outside of USA or Canada or something like that. And I'd see just in general, my numbers are so off on those, so it has always been hard for me to do anything. So for me in swing trading, I'm definitely caring a little bit less than I used to do in the value.
Yeah, I mean, the one thing I'll say is it depends on how they file, because I had to create the ability to look at something that's only files twice a year or only files once a year.
Yeah.
So some of the ADRs and stuff like that only file once a year. So that I had to make a special way of adjusting my data to try not look at it quarterly.
Yeah.
But with that being said, as long as I had those things in there, and as long as I made sure that the currency translated, because sometimes they report in a different currency, so I had to make sure that when I went through, if anything's not in US dollars, that it immediately converts everything into US dollars, because kind of a pain with Share Radar is it doesn't, certain metrics are always converted to US dollars. So you have them, but other ones aren't. So for the ones that weren't, I had to go through and make sure that it's always adjusted for whatever the currency rate is. And the other problem with that too is the currency rates change so often that even though it's going to be close, it's not going to be perfect. Now, usually it's close enough that like, if something's moving by a couple pennies here and there, it's not going to change the overall bigger picture, but still something that like you have to take into consideration.
Yeah.
But yeah, I think my numbers for YALA look okay. But once again, like I said, it's a holding company. So, it's not like anything's going to be totally steady right now. And it all depends on the different things it's in. And with you saying, the fact that it's a foreign company, there's risk everywhere right now. You know what I mean? Like if these tariffs really come into play and it ends up really changing the way the global markets react to each other, it could be, a different picture than what we've been dealing with for the past, probably since like in the 90s when like, like the trade agreements with, NAFTA and all that was set. There's, the trade agreement with China in 2000, when the European Union came together and made its trade agreements with the United States. Like those things are all huge trade agreements that matter in different ways. So it all depends. We'll see. And that's assuming that China is able to kind of hold it together and remain or continue to strengthen as a world power. I'm not as convinced that China's in good of a position as they acted like they are. I think there's a lot of cracks that actually show in China. I don't know. To me, I don't trust their numbers first off. And you see like high level executives, like China will say that they're like in a good spot here, and then like a day later they'll fire like one of the top guys in that, and it's like, I don't know, it makes me a little cautious of anytime the information's obviously being controlled that's sent out of a country, it's tough to really rely on it. So yeah, it's one thing with China. There's always a higher risk, I feel like, with some of those countries.
Yeah. I'm just looking at the Groupon a bit. Their fundamentals are not the strongest right now, but I think I would have to read up a little bit on that platform.
they're pricey on every metric I have.
Yeah, I
So,
agree. But they
so
are
I will
also
say that Groupon's definitely. What happened recently that caused Groupon to go up by so much?
November 12, Groupon announced a 200 million financing transaction. But that was in November.
See, my thing, like, does anyone use Groupon outside the United States? Was that something you guys used?
Oh yeah. Oh, hold on. Hold on, Dane. I'm confusing the companies. Like everything I said about the platform and stuff, it's not for Groupon. It's for another company. So just ignore everything I've said actually.
Okay. Because for instance, I just remember Groupon was like a big thing in the US for like a while, like everyone was using it.
Yeah.
And I can't think of anybody who uses it now.
No, and I'm not sure in Europe if other countries are using it, but it's not a big thing here. Maybe it was for a brief time, but I've never used it here, and I'm sure we have alternatives, you know, that are bigger.
Yeah, it's to me, I just don't see. I don't see the growth that to see the stock price do what it does. Now, don't get me wrong, I'm willing to buy a breakout because it's a breakout.
Yeah.
But with that being said, I don't know. If you're just looking at Groupon from a value side, I have a hard time thinking that this is a value.
Yeah.
Or you can even live up to growth models, is my point, I guess.
Yeah, no, I agree. And also, if you look at the share count since 2020, it's just slowly going up and revenues going down in the same time.
Like I get book value for this at like 580 with diluted share count. So, I mean, we're trading at 4 times that almost.
Yeah. No, you know which company I confused this with? GoPro.
Oh, GoPro.
Yeah.
Yeah, totally different.
Which is very different, of course, because so everything I said earlier was for GoPro.
Wow, I just pulled up GoPro. Do you see that's worth 50 cents?
No, so they this is what confused me a bit, because I knew they were having to renew their platform and stuff, and I guess they have not succeeded with that then.
They got all the way down to below 40 cents on that one day it dropped.
80 million market cap.
I mean, GoPro's another thing that just kind of like, it was a decent idea, but now everybody has cameras on so many different things. Like you don't need a GoPro for so many
that was
things.
the thing, and that's what I said earlier. Like they tried to renew their platform with stuff that you could edit on their platform and stuff like that, you know, so they would get the consumer to hang out on their sites more. I just think like it's probably dead, this one. It's gonna be hard to turn this around.
And like GoPro, like if you look at this chart here, if you look at like March 10th to March 26th, where it started to break past down its low there, like this to me is like, it seems like this could have been an obvious short.
Yeah, that is true. Like, and how much is that?
Just also in context of us being in this like bear market, that's what I'm saying. Like, I don't know. If it was a bullish market, I'd have a harder time calling that drop there. But I feel like in a bearish market like this, you have a sell-off, it breaks through its lows. Like this is where I would see breakdowns working.
Yeah. So then would you think also like what is it this? I guess it's the 50-day moving average. Like it hits its head in the 50-day moving and then you just turn around, right?
Yeah, like at the very top there on what was this, like March 23rd-ish or something, it almost hits that 50-day moving average and then just tanks from there.
Yeah, but it also did it like, in 6th of February on earnings. It went up on earnings and then it crashed into the 50-day and then returned back again. So would you look for pattern like that, like just the reverse?
We can't break through that.
Yeah.
It would just makes me think institutions there. Someone's selling every time it gets to that 50-day moving average to try and get out of this.
Yeah. Who owns this? Because
Somebody else soon. It's only worth 77 million. This is getting into easily be buyable territory.
yeah, there's been some selling in institutional ownership too. Yeah, sorry for sorry for the stream that I confused this, but with Groupon. Groupon then looks to me just like good on the chart. I didn't see anything value-wise. I don't know about if they're gonna renew the platform or anything like that, but GoPro looks like this will be hard for them to turn around, in my opinion.
Yeah, and I pulled up EMX and Sand for that matter, and they're just, the companies themselves look pretty safe. They don't really have like crazy amounts of debt or anything like that, and their metrics aren't really all that impressive. It's more just the whole sector is doing right now because people are pivoting into minerals essentially, mining, whatever it may be.
Safer
SSRM,
harbors.
Obviously the one that we've been following for the longest time, but.
What was the other one? Sand,
SAND.
Yeah. Yeah. And I have to say,
looking bullish.
SSRM also, Dane. They are in the same lane,
Right.
It did drop, and then now a nice bounce back up towards. We are getting close to 11 again. So yeah, I'm still in there. Looks good. In
I
my
like those
opinion.
ones.
And by the way, in my sheet, gold and silver has gained a point because I have a scoring system. So this week it gained a point, both of them. And naturally, I think it's not like you need a sheet to see that has happened or anything. It's just like I think gold has been strong for a long time now.
Are you able to show that sheet or no?
I can show the hold on. I can show like without opening it up too much, I think.
I'm just more curious on how you built it, like what you were using for
it. It looks like this. If you can see, I don't know. And I have a lot of scripts here, but here this column W is just like the total score. If I open up one of these categories, I have added tons of tickers that fits under pure AI plays, and then I have the performance and a scoring system, and I just take the average and give me a total for the group, and then that total also give me a score from 0 to 5. And as you can see right now, the top score is 1.
Gotcha.
And you didn't see this because I did it yesterday, but if I press this picture here, there's a script running, because every time I update my universe, I will get some colors here. Green if a group has gone up, and red if they have gone down, so I can see, the moves.
Interesting. No, I'm just trying. I really like this.
Sorry?
I said I really like this. This is nice.
Yeah, I think it's a good sheet to have, and I hope that it can teach me to spot some stuff at bottoms and also at tops, The only thing I have to test and tweak a bit is the actual scoring system, because I give them a percentage. Like I started giving the weekly performance a too high of a percentage in the calculation, and then if it dropped 20% in a day, it quickly got to 0 in the score system. But I think I have a pretty good score system now, and what I have experienced, when the quantum computing sector was really hot, it never got up to 5 here in my sheet, so it's very hard to get 5, which I think is a good thing. But it got up to 4. I think 4 has been the highest score I've had. It just so when they reach like a score of 3 and 4, it means like they are really outperforming, I think. So, you know, even if it goes to high, maybe I just have to look at things that moves to 3 and 4 as good, because I don't want to mess around too much with the scoring system anymore now. And what, for example, in robotics here, I saw robotics went from 0 to 1, and I found like inside here there's a stock called MBOT, and you can see the score it has here. It's like individual, this stock gets 3.225, which is quite high. Like I just said, it's very hard to get 5. So that just, if you pull it out, that made me add it to my watch list, because I also liked it on the chart in terms of looking at the breakout pattern. But you can see it has some big moves this last time. It's up 70% almost, and that drags the whole. I call it theme. I know a lot of people call it a theme. But also then if I see other stocks here starts to move, maybe this is something I can focus on if I see some, some breakout patterns, and maybe hopefully I can be a bit early then.
No, that's cool. I like that a lot.
And to justify the stocks I put into each group, I use ChatGPT and try to play around a bit with it and make it find other stocks that has, for example, hydrogen as their core business. So I'm trying to just put in, like, you could put Microsoft and stuff like that into AI and everything, but they are not here in my sheet, because this is like they need to have it as the core business.
Johnny, do you think it's dangerous though that the robots recommended the top stock is a robotic stock?
Yeah, no, I thought about it.
Is there a conflict of interest here with the AI?
But I didn't dare to not add it,
Yeah, true. You can't go against them. Then they'll end up messing with all your numbers here and lying to you.
And then just up top here, it's like the best performer of the day for the ones I have added, and also the worst performer and which sector they are in. So my idea is to just keep on adding stuff here to make like a universe over time,
Yeah, no, the other thing, and it's kind of the same with my market strength thing, is because you're updating this almost daily, it's allowing you to kind of watch these things and kind of like getting a feel for them at all times, as opposed to like, because with my dashboard, there's so much going on in the dashboard. It's not like I'm paying attention to each part of it. You know what I mean? Yeah, I look and see what things are moving and whatnot, but I'm not really focusing on like all the fine details. When you put it down to a list like that, where it's just like, 15 to 20 of them that you're looking at all the time, you really start to see which ones begin to outperform and which ones, continue to just kind of, putter along.
One thing I have to say though, like if you go back to December around, I don't remember when I started to build this, but I think I had it in December. My point is, I haven't seen like the value of it until now, where we are in a very bearish period, but at the same time, that's probably where you wanted to give you information, right?
Yeah.
So I have to see how effective it will be over time, but it's just something that I have thought would be beneficial to have.
No, I think it's great. And I'm wondering, because I already have my my industry filter in here. Since I have an industry filter already built, I could just basically assign a number to each one of these that would just be based on even if I just based it off the momentum that the stocks had,
Yeah.
Like I can do like even just using 52-week high, and just that way I can see how close we are to highs and how many of them are that close, and rank them on that.
Yeah.
Because I already have this all built out to break down everything into every, at least in the way Share Radar gives me my data. So I really haven't been using my industry tab like I was wishing I would more, you know?
Yeah,
And maybe that would be a way to help me focus on what's actually moving and what's really worth kind of getting into versus not.
yeah. And for to build this also, I had to adjust my, because I pull it from the universe that Y sheets give me. You know, everything is from there. And I had to adjust it because I had filters on it to just stop giving me stocks that were below 20 million in market cap. So I open up the universe to, I think I have 5 million now, because in terms of swing trading, I would, 5 million is maybe a little bit too little, but I would still want to look at it, you know, just to have it in here and not exclude it entirely.
Yeah, I won't go much below usually like 15.
Yeah.
But I see what you're saying, especially in terms of like, it's not necessarily that you would buy those ones, but it's good to have the numbers.
Yeah, and I also wanted them to include them in these themes, you know, so they are included in the group.
Well, and with themes too, I mean, some of these industries, they might have a lot of small companies in them just
Yeah.
because that's kind of nature of the industry. So to discount that on those ones would be kind of possibly putting a blind spot on yourself.
Yeah. And what I told you also, that one thing I noticed, and maybe this is very obvious to a lot of people without looking at my sheet, was that, you know, stuff like solar, ethanol, you know, all those green stuff, they seem to just be hard to perform in any kind of market, right? They don't perform
Well, like I said,
now, and
too,
they didn't perform when it
I
was,
think
well, they
the
perform, but not.
investment from the government got pulled out from a lot of those.
Yeah, exactly. It's just like really hard. At the same time, I think it was last week, I saw EVs and battery was up. So those two are, you know, performing to a certain degree at least, but wind and solar and those things, it's just, I've never been a fan of investing in those companies. Except, I have to say though, Alto deals with ethanol and all that stuff, so that's the exception. But that was also a asset type of play, you know.
Yeah, but because I was just gonna say, I like the idea of playing like batteries, because no matter where you get your energy from, it's beneficial for us to have better battery technology. So yeah, you might be able to disagree or agree whether green energy and all that is the way things are gonna go. But the batteries will always be there. You know what I mean? Regardless of what form of energy we're using, that's always something that needs to be improved, because without better battery technology, I mean, a lot of these things don't even work well.
Yeah. And who has control of that market? The
robots.
Yeah. They we can't get rid of them.
No, the robots are only gonna slowly start to outsmart us here.
Yesterday I saw a Chinese robot that started to attack a person in the crowd.
Yeah, well, I will say, if you're wondering where the future of this kind of stuff goes, countries like China are typically the first ones to implement these things. So we'll probably see that there first.
Yeah. So I was just, I was thinking like, that guy that the robot attacked, he knows how we feel, right?
Yes. Yeah. I mean, I've never been physically beaten by a robot, so I'm lucky there.
Yeah.
Just emotionally in the stock market, I've been beaten by the robots.
But also, I don't know if this is true or if it was like a proper video, but I think it was. I saw what do you call those when you are missing an arm and you can put a plastic arm on?
Like an android or a cyborg?
Yeah, exactly. But it also could take the hand off, and it was like a wireless hand, and you could still move it.
It's like an you remember the Addams Family? They got the hand.
Yeah, exactly. Yeah. and I maybe someone is tricking me, but I think it was legit, and I just thought that was insane.
Yeah, so two areas I feel like right now in terms of cycles, like it seems like the Trump administration's been pretty pro crypto lately. So that's one area I'm kind of interested because it has had a pretty large pullback. But the other thing too is crypto tends to kind of move along with the regular markets. So
Yeah.
I'm not hugely bullish on that. And then obviously like minerals and mining. I feel like those are the two strongest sectors right now.
Yeah. And in the scans, maybe, well, also in terms of setups, I've seen some biotech and medical stuff.
Well, I think biotech, medical, that kind of thing, those are kind of like you're always going to see that. A drug company, for instance, could come out and prove a new medication tomorrow and it's going to take off. It's not, it doesn't necessarily have to follow the markets.
Yeah. No,
those are like that's why I said if you're ever going to do biotech, you're best to kind of spread your bets out and just hope one of them takes off.
Yeah.
Or do the exact opposite and short them and just pray you don't pick the one that goes up, 5 million% one day.
Yeah. Here is the gold futures. Look at this graph.
Exactly.
Pretty steady, right?
Yeah. So
and I saw XRP. For a while I was keeping an eye on XRP, but yeah, it's moving sideways. I thought
another one that is kind of interesting is if I'm looking at like countrywide, this should have been kind of obvious, but I think Argentina would have been a really smart country to invest in here just because they had such a negative outlook, and then everything kind of turned around for them with Javier.
Yeah.
And if you look at their chart, I mean, it bottomed out. The ETF I'm looking at is ARGT.
Yeah, I have it here.
Yeah, it goes from around $23, and now it topped out at 90.
Yeah.
I mean, and I know that's over like a 2-year period, but I'm just saying that one could have probably seemed a little more obvious in terms of different kind of plays here.
Yeah.
And it's the other thing too is like just to keep my universe somewhat tighter and not go too crazy. I haven't been really like looking for ETF breakouts, but it's not to say that those aren't possible. It's not to say that these aren't things that you could do well with.
No, I was gonna ask you now because I keep referring to some of the interviews in Trader Lion, but I see a lot of these people like Sean Ryan, and then he wanted to he made a lot of money on some ETFs stuff, and also like the a version that is geared up a bit, but it is the reverse of a ETF. How are you? We haven't spoken so much about doing stuff like that, but what are your thoughts about those types of things?
The one thing I'll say about ETFs more specifically, and the reason why I don't tend to look at them, is because I think they're less volatile because it's like an index and it's a conglomerate of the whole industry.
Yeah.
Not to say that they can't go up and the whole industry can go booming, but for instance, like if we're talking like when quantum computers had their big jump, I would rather find the top 3 or 4 companies in quantum computing and do my breakouts on those versus just taking the ETF. Because I'm not saying that the ETF isn't an overall like probably decent play, but I think it's more conservative in terms of what the kind of return you're going to get. Where if you invest in 2 or 3, 4, whatever of the top companies, you have a chance of one of those being, like let's say the whole market, or let's say the whole industry went up 10% on a 3-day move, but 2 of the companies went up 50%. I'd rather be in those 2 50% companies and then the other 2 that only went up like 10 or 15 or even less than those ones, and take the average a little bit higher than what the ETF would have performed.
Yeah.
So I guess it depends on how many positions you're going to take.
But then you also have those levered versions where you get like 10 times, and if you adjust your initial position, then
I will say the problem with a lot of those ETFs though that are multiples is a lot of those reset at the end of the day, and they're meant to be held for the day. So you also have to just kind of pay attention to some of those factors.
Yeah. See, these are things that I haven't considered. Even in my scans, I just have stocks. But as everything else, I'm probably gonna at some point open my my skills and learn a bit more how to do those types of things. But I agree with you, and we talk about here on the stream also like market cap and stuff. So ETFs goes a little bit against that point, like something is too big and slow of a move. I don't know. Have you seen Kulamagi do a lot of ETFs stuff?
I know he did. I'm
Yeah.
not saying that he did a ton of it, but I know he does look at ETFs as well. So
Yeah.
he was not opposed to it in any way.
No, and he didn't focus too much on market. I know he did a lot of stuff with Tesla and other things. So yeah, I'm sure he looks at market cap. Don't get me wrong, but I'm not sure if he has a limit.
Well, I would also think too that the ADR for something like an ETF is going to be lower than it would be for individual stocks. So it also could have just it could have got weeded out essentially through his screening process to not have as many ETFs due to that.
Because when he streams, he really hates ADR below 5.
Well, I understand what he's saying, though. You're looking at really strong momentum stocks. And the other thing, too, is if you focus on just those higher ADR stocks, your chances of getting bigger, better returns are higher.
Yeah.
Like I said, you're looking statistically at trying to find an area of the market where breakouts are working. You're trying to find breakouts that continue to hold. And then you're also trying to find the strongest of the momentum breakouts, because those are the ones that return the fastest in the smartest or in the slowest amount of time, or the quickest amount of time. So knowing that, you only benefit yourself from focusing on those kind of metrics.
Yeah. We spoke about Herbalife earlier on, I think it was last weekend or something.
Yeah, didn't that sell off?
Yes, I was gonna say, like, I had to take it off the watch list because I think it's just like not in a good looking pattern anymore. This one was one I had a little bit of hopes for, but it broke down. And like I started out with saying on today's stream, like, if this turns around, my scans will show it to me and I will add it back again. Right now I took it off the list.
See, and this is an example of where a breakdown I think would have worked perfectly. Like when it broke past like I don't know, 775-ish, around that region, somewhere in there. If you would have shorted it right there and held it for 2-3 days, you would have been fine. I mean, the second day it did come back up, but I don't think it would have triggered a stop loss if you had gotten in at a good time.
Yeah. And
just like I said, once again, with this overall bearish sentiment, I would have had a lot more conviction going into something like this.
Yeah, that's what we said also last time. Like, I wish I could. I wish I was a bit more advanced and more experienced in terms of shorting, because here I'm sitting with a tiny loss year to date. Don't get me wrong, I'm pretty happy and I'm pretty satisfied to have been in mostly cash in this period, and also SSRM have outperformed for me. But then the guy comes and he shorts everything and he is up 60% year to date,
And possibly more right now.
Yeah, probably more now. I saw copy though.
And that's to your point. I agree. I'm up for the year to date, and it's only 2.5% right now. But I totally avoided this mess of whatever this has been the past month.
Yeah.
So, and like I said, it's not that I'm shorting right now. I just want to watch it because I know in the future I probably will.
Yeah.
So
I agree.
It's more during these time periods where I can start to see, what it would have looked like if I had been doing it now.
Yeah. I saw Copy. He has been a bit active on Twitter, and he doesn't seem very impressed with what's going on right now. Didn't you also send me a link to one of his tweets?
Possibly.
Yeah, it's just a copy, you know. We have talked about him before, but he doesn't do swing trading as far as I know. Yeah, I'm not sure how I will deal with this coming week, but I think I need a lot of signs before I jump into a lot of tickers. Maybe I take one or two, you know. I'm very interested in this MBOT ticker. But it needs to be, I think I need to wait for a breakout. And like you said earlier, like you see the volume, it's picking up a bit. So hopefully it will continue up and I can get an entry here. Then I think I would try in something like this, even if it's in a biotech industry. What about you, Dan? Do you feel like you need, like, how much of science do you need before you start to, you know, buy? If this coming week is mostly green, will you take stuff, or will you still be
Possibly.
careful?
Like I said, it's kind of tough to say because my market strength is only a few weeks old. I saw Pradeep had posted because someone was asking them how he starts to look at things, and it was one of his longer term categories when he actually said he would start to turn bullish again in a period like this.
Yeah.
So it seems like, so he has two different kinds of indicators for him, and there's kind of like a short term and then like secondary in the long term.
Yeah.
And when he said in average, like most of the stocks start to be up over a certain percent, that's when he starts to reconsider getting into breakouts. So like I said, for me, I noticed on the short-term stuff over the past week, things have slowly improved, but still on the long term, we're still at a lot of lows. A lot of stuff is kind of not towards its 52-week highs. Now we have clawed our way out of the real bottom, but we have the 90-day grace period or whatever it is for these tariffs. But I think that once again, every time I hear like a time period, I always think of optionality. So this is one of those things that we might be good for the next maybe month or so because that keeps those tariffs kind of a long ways away. But slowly, as you approach those tariffs, the negativity towards what they can do to the markets will start to creep back in, and you can watch things start to slowly sell off again.
Yeah. I saw there was some report saying India wanted to negotiate with USA now.
Yeah, I think there was about 70 countries is what the number I kept seeing, whatever that means. And I don't know what countries it was or what wasn't.
No, it's very hard to comment on anything like that. So you just have to wait and see what they report in the end. But if in this 90-day pause period now, a lot of countries come out and say they have negotiated terms to continue trading and stuff like that.
Well, yeah, I mean, I would think, best case scenario for Trump and all that would be that, if they end up keeping the blanket 10% tariffs on, and make that like the cost of living or cost of doing business with America, I could see why that would stick, and most countries would kind of just have to tolerate that. And then in the idea that, okay, that becomes bearable and it's whatever it is, it's whatever hit to your GDP that you want to take. And, if you want to continue to do business, you do. And if not, I guess look elsewhere for someone else who will buy your products. Yeah. But if that sticks and most people are kind of like, whatever, I'd rather just keep paying these 10% ones and I'll come to some kind of can get concession with the US and making sure that the tariffs don't increase from there. If that plays out and that's really what ends up happening, I think that's a win-win situation for the US at least. If a bunch of countries continue to kind of just say screw it, we're not playing ball, that's where I think the markets will take a real hit from that.
Yeah.
So we'll have to see. Like I said, the one big question here is what China and ends up happening.
Yeah.
And I don't see the Chinese economy as that strong. I really do see that it looks to me like it's fundamentally in a tough spot. So we'll see. I know they're dropping the price of the yuan in order to, make their outputs, that much better, and try and keep their exports competitive. But I don't know how long they can keep pulling those levers and stuff like that. You know what I mean? Same thing with the US, if these tariffs kick in and it really hits American consumers hard, how long before like the actual American people just like refuse to tolerate, the way things are. The problem right now is I feel like, most Americans were so upset over the inflation. That's kind of where we are at the point that we are. So, one other smack of inflation, it could be too much. It might be more of a thing where people understand what the point of it is, but we'll have to see, because sentiment can change quickly.
Yeah.
So
I just pulled this up then because I forgot to show it in the beginning, the percentage of stocks above 50-day average. And we have now, it's just above the red line now, but it actually did drop down. And if you look here in the graph here, last time it went this low was in March of 2020.
yeah.
So that is like, it's saying something, right? But it didn't have as steep of a drop that it did back then. But this is like, we are in a we are in a very rough spot here now. But you also saw the potential for any good news that the entire market. What did you say was up 10%?
For what part?
On Monday, it went up 10%, right?
It was, I don't remember what it ended at the end of the day. At one point, I think I saw 12%. I think it had just 12% up. So, I mean, a huge rebound. But
that was just on news that they later said was fake news, right?
Yeah. Was that the fake news day? It might have been.
I think so. I don't remember. It's hard to remember the differences. But the point with this is like, I have showed it previously on the stream, and we have been in this territory between the green and the red line. Now it has completely fallen off, and we went pretty far below the red line even. So it's just like we said, also in the weekly movers and stuff like that, we see a lot of companies with a tiny market cap now.
Yeah, and I think it's kind of a unique situation because number one, I think the market was obviously overbought. I think on just PE valuations across the board, things were too expensive. And now you have this possible restructuring of global trade on top of like a system. In my opinion, the American system, in terms of the debt that we're taking on, it cannot last for forever. So there has to be a fundamental change in how much we're spending. So I think like all those things are kind of colliding at the same time. And it's not like it's a COVID thing where it's like a quick acute thing has occurred. It's that like, this is everything that's kind of been boiling underneath, like, of what's been going on. And it's slowly, we're getting to that point, and everyone kind of realizes like things are going to have to change. And it's just like, what will that end up looking like?
Yeah.
And I know we don't normally talk about macro, but like, I feel like it's almost important to kind of like think about these things. Because right now, really my bigger concern, it's less about execution in the way that the style works. It's more about getting us back into a period where I think it works. So where normally I don't focus on macro, it's kind of where my focus is right now, because until that improves, the rest of it doesn't really matter to me.
Yeah.
I will say, we had talked about doing some more fundamental in like deep value type things. But even when I'm looking through deep value, I was screening before. And to be honest, stuff is either, I don't know, like there's some cyclical things that look decent. But my problem is so much stuff was oversold in the first place. A lot of stuff doesn't look that great. And
no, I agree.
And in like when I pulled up some names that I thought looked okay, I start looking through stuff and I'm like, to be honest, I'm not really happy with a lot of this. And the problem is a lot of the stuff that looks like it's in a rough period, where before, like when RK was doing this and we were in that low interest rate environment, a lot of the bankrupt companies survived because of that low interest rate environment. And now that we're back to like it's actually really like an average interest rate. They're not going to make it. So I'm not looking at some of those things because, to be honest, like I need a clean balance sheet. I'm not willing to take the risk on right now because, in my opinion, it's just throwing the money away. These things will not survive with these. Like we're talking about like people, restructuring their debt and then whatnot, and it kind of gets them out of the bind. But at the same time, they restructured, but now you need to perform, and something really has to change. Or that business, it doesn't matter. The business is still going to go down from here.
Yeah.
So you get an initial bounce on something when it restructures or it offers shares or whatnot, but it's just adding time to their the inevitable.
Yeah. I think I pulled up PBF here, Dane, because PBF is a name that we have followed for a long time, and it has dropped. I think it dropped down to 13 bucks, which then, okay, it starts to get cheap, but then I pulled up the fundamentals, and it's like there's a few things that I like here, but there's also I thought it would look better. You know what I mean?
Right. And I think that's kind of what I've seen in general as I pull up stuff. It's like, I don't know. I think honestly, and I don't have a ton of time to go through and do it right now. And I'm going to be back to work and everything here. Yeah. So my time's going to be even tighter. And without going through and doing the real stone flipping, and looking at stuff at 52-week lows and more reading like the quarterly reports and the earning reports to kind of see what people are saying. That's where I see the difficulty. I will say PBF looks, I think it looks pretty cheap here on the metrics.
Yeah, like I said, and then there's a lot of things that I like, but also then you get the what you can lean on here is the inside 547 million in the last year inside
the one thing I will say though is what there's been a huge hit over the past year though, and while it trades cheap right now, it could be cyclically high.
Yeah, you mean in the cash flow and cash generation?
Yeah, earnings, cash flow, everything looks like it's revenues have taken a big hit. Don't get me wrong. Like I said, we're still trading well under book value, but sometimes that's like the worst time to buy these things.
Yeah, I agree, and that's why I said like, if you look at the averages, like this looks very good, but also in the last year, and like you said, maybe it's maybe it's in a end of a cycle or something, and it's just like I'm not as confident as I thought I would be when I looked at this at 13 bucks,
Right.
But maybe maybe that's wrong of me. Maybe
to, like the first year of your data there, like see how it looked like it was really good there and maybe cyclically high, and then after that point it looks rough for the next 5 years.
Yeah.
They did double share count, and they have been paying off some shares, but it's not as optimistic looking as one would hope.
No. And okay, the debt has gone down overall in the last 3 years, but from 23 to 24 it's a bit up again, and I'm not sure how involved Carlos Slim is in. Obviously he owns a lot of shares, but yeah, it's just like PBF is going to be interesting if it drops to a certain point. I think for sure, there's no question about it. But I like I said, I thought I would be more impressed here than what I am.
What do you have for their cash right now? Because I just have it went down by a ton, and it's a worrying perspective to see how much it's gone down.
You mean excess cash?
Excess cash, yeah.
Yeah, I have 205 million, and it went down from 1.4 billion.
Right, that's what I'm saying. So, and I know they did spend a ton on CapEx, but
seems like they have reduced the share count too. So I'm not sure if they have spent some on a repurchase program or something, but
No, I'm sure they have, but it's not down all that much.
No, no, it's not. But yeah, that's what I mean. Like when you see that, and I haven't, I haven't gone into these. The SEC website has changed a bit. Have you seen that?
Doesn't it always?
I hate when they change stuff.
Yeah, a little bit.
Yeah, can still figure it out though. So yeah, I don't know. Here it says they have some cash here, but I would have to dig a bit deeper on this one to figure it all out. But there are enough. I think, if the environment continues to perform like it has been, you can look at the chart and see where this has been trending.
True.
And it's still a 2 billion market cap company almost.
Yeah, I mean, I don't think they have any issues right now, like in terms of like survival, but
No,
I just
but
have to
this,
read more into this one, to be honest.
I remember when we did the deep value and it was around here around 25 and even 28. I was watching it because it started to move sideways here a bit for around 25 bucks in December, and it went up a little bit again, but then once again it turned around and it has just kept falling, and I think it reached below 14, at least 13 something.
Yeah, and I'm looking at the comments on Seeking, and one guy's like 20-30 bonds at 50% yield today, or yield. He's like, I'm buying. And then someone said, oof, thanks. That makes me nervous as a shareholder, though, since the credit market's pretty smart.
Yeah. PBF Energy to offer 750 million of senior notes due 2030. And this Ronald Ferry guy, he's very bearish, it seems like.
Yeah, and a lot of people are saying, too, that most likely they're going to cut that dividend, so you always know what that does.
Yeah. No, but that's what I'm saying though. It's still a high market cap company. And if you look at the just like if you just look at the general trend here and you believe that it cannot get worse, it could if they cut the dividend, for example, and other stuff like that, if they issue more shares, and there are a lot of factors, and earnings are coming up, and if you look at the last 3 earnings, they have missed on them. So that's a full year of missed earnings estimates. So again,
Yeah.
it's a reason they are trading like this,
Yeah, other people are saying that this is the 4th or 5th best refiner, and there's plenty of other higher quality energy stocks at bargain prices in comparison. So it could be, too, that besides PBF, there might be other better plays in this sector.
Yeah. The only thing against that, though, is that Carlos Slim, he doesn't agree with that, apparently.
Well, if he's been heavily invested, though, and now the stock price is this depressed, it would only, I mean, it benefits him to buy now.
But I noticed on the last 2 purchases, they were substantially lower than what he has done. Because he bought by like 5 million, 6 million, 2 million, and now it's like 200,000.
Right.
So I'm not sure what that means, or if you can read into something like that. But he bought 6 million at 22 bucks, and now at 14 bucks he buys for 238,000. I don't know. I just want to wait more with this one.
All right. I think I got to call it here.
Yeah, that's fine.
But yeah, I'm gonna kind of continue to kind of peek at everything I can. Keep going through some of these names to see if there's anything that I can find down here.
Yeah. Swing trading wise, I think my focus will be a Groupon and MBOT for this coming week, and everything else that comes through the scans. Probably not going to take anything, but those are probably the names that I will take if I see a lot of things going for them, I think.
Yeah, just continue to screen, see what pops up.
Yeah.
Like I said, I'm back to busy this week, so there's going to be days I probably can't do very much looking at markets. So it just is what it is. So,
Yeah.
but the focus as always will just be on well, right now it will be at the end of the day for me, really more so just to see how the days are performing, and then as soon as I start to see the percentages climb up, I'll be more interested in getting back in on these things. You know, the one thing I wish is I had the numbers from when we were in the really bull period, because that would give me a much better indication of where we need to get back to that time period when there was just breakouts occurring all over the place.
Yeah.
You know?
Hopefully it will come though, so that you get the data for other years.
Yeah, I mean, I'm not worried about that. It'll come. You know, these things, they look terrible, and you know, stuff changes. And like I said, we even talked about it too. Like, I mean, with everything going on here too, would it surprise me if I woke up Monday and they said, you know what, we're gonna just never do tariffs again? Wouldn't surprise me.
Yeah. I have to say though, I think it was, I don't remember, one of these days I went through more than 1,000 charts because it came up in my scans, and I did not find many with a good setup in terms of a breakout pattern, which is natural because things have been hammering down a bit. But you know, even if they pass the scan filters, it doesn't mean that it's a good swing trade. Even if things turn around a bit, I think you need to wait for some whatever pattern you are using to form.
True.
Yeah. All right. Should we say bye-bye then? And hopefully next weekend we will... What do you think, Dane? Do you like Sunday or Saturday? I see today we have had some viewers during the stream. Last time the same. So maybe Sunday is better for people. I don't know.
Yeah, I'm not sure. It honestly, it depends on the week. You know, so it's not like it really matters to me per se.
I have noticed also that at least for myself, I tend to update on Discord now and not so much on Twitter in terms of when we're gonna stream and stuff. So just pay attention in Discord if we're gonna update you there.
Yeah, and also the Discord warns you when we go live anyway, so.
Yeah. And I forgot, Dane, we had a ticker suggestion from Value that I completely forgot to pull up.
Yeah, I didn't even see what it was. I think I remember what you said, or seeing that too.
Yeah, we will. We can discuss it in the Discord in this coming week, or see if we can do it next weekend.
Actually, I'm in stock charts right now, and I forget they have their own sector section that just shows you what stuff's moving, which is kind of nice to have.
Yeah. Y Sheets has started with that as well inside Google Sheets. You can scroll to a tiny list of performance and stuff like that. So it's just, I was thinking the other day, like, it's incredible, you know. I don't know if it's a lot of money to people, but I don't feel like I spend so much annually on doing everything, like having TradingView I pay for TradingView, I pay for Y sheets, I pay for Seeking Alpha, but I think that's it. So for me, it's not a lot of money annually, and the amount of information I have access to, I'm pretty. I think it's impressive the amount of information you can have these days.
No, for sure. I didn't realize this. I'm just playing around with stock charts. It actually allows me to. I see. At first, I thought it just showed you the sectors, but when you click on the sector, it breaks it down to industry, and then when you click on the industry, it already has all the names divided up.
Oh, so it's like my sheet then.
Yeah, it's kind of nice. I didn't know it did this. So
yeah. And I know that what is it, TC 2000, the one Kulamagi used? Oh no, it wasn't even that. It was the one Minervini used. I don't remember what the name is. Either way, they had they had lists also there in that platform that could divide things into themes and sectors and stuff like that. So some of these platforms already have it built in. Market with no, what is it? I don't remember the name of it. All right, Dane. Any last words?
No, I think that's it for now. I'll probably continue to play around with this.
Yeah.
But
that's gonna be your Sunday.
Yeah, so we'll see. Probably another interesting week. I don't have any idea where it's going to go from here. It always seems obvious afterwards, like, it's like, oh, I should have bought there or not, but it's tough. It's tough to think in hindsight like that. So
yeah. What I did see though, I think end of last week and this week, was that a lot of people that I heard, which was like, they don't work with stocks, it's like retail investors. That's the right word, right? What you and I are. Yeah. Here in my country, at least, they were like, oh, I'm buying, and the platform saw like a record high volume and stuff like that. And that made me think like, I should wait a little bit more, because everyone now is jumping in and everyone has learned like you should buy when things are red and stuff. But for me, that seemed a little bit too early. But it's going to be hard to time.
Well, I will say them backing off the tariffs first time does give a window of time that we haven't seen in a little bit. So there's a chance, but yes, you take that risk on. So it's tough to say.
Yeah. All right. See you then.
All right, everybody. Have a good rest of your week.
Bye-bye.